Nothing said on the Hivemind is a recommendation to buy or sell securities or tokens. This podcast is strictly for informational purposes only, and any views expressed by anyone on the show are solely our own opinions, not financial advice. Hey everyone, my name is Jose Macedo, and welcome to the Hivemind podcast. The goal of the podcast is to provide an inside look into what we like to call the Delphi Hivemind, bringing together some of our brightest minds from each of the divisions to share insights, alpha, and shitposts. Today with us, we have Ceteris from our institutional research arm, who focuses on infra and DeFi, Jan Lieberman, managing partner of Delphi Ventures, and Ventures associate Duncan, also known as Flood Capital, prodigious shitcoin scavenger and investor. I lead Delphi Labs, our protocol R&D arm, focused on incubating and accelerating new Web3 primitives. It's been a hectic 2 weeks since our last episode, where Duncan called the top on air. Everyone has become ETF experts, so maybe we could start there, talking about the flows or whatever. Who wants to kick us off, explaining why bad price?
Well, I think I guess people just underestimated this GBTC selling, because there
I don't
were
even know what's the net flows from if you net out GBTC and
I mean even
net is
including
80 million, 800 million.
it's 824 net, which includes a 4.4 outflow of GBTC.
yeah.
So
I don't even know if the underperformance, obviously GBTC played a big role in it, but I
It's
think
just
a lot of
traders.
it was
It's mostly
just
traders.
yeah, you have
800
such
million outflows in 9 days is negligible, right?
Mhm.
So I think it's more so traders, right? Doug had that post and just breaking out, the basically the types of people that have exposure to GBTC and assessing, who's neutral on a trade and who's naked on a trade. And basically it's the naked guys that would be the net sellers, whereas the neutral guys, when they unwind, are selling here and buying somewhere else to close the other leg. And so it's basically the underestimation of the amount of unwind of that naked position, but then it's also, which part of that's driven by FTX, right? They had a decent amount. I think that was probably one of the bigger underestimations in terms of flows. And then the other thing is how much of that is just flows back into the ETFs themselves. So it's hard to assess if they're naked or neutral. And you have a bunch of volume, but it's just a lot of it could be people moving in from one product or out of one product into the other. And so it's not necessarily an insane amount of net interest, which is probably the one interesting kind of element here is how much of this is net interest in the ETFs versus how much of it is unwinding of GBTC just going straight back into the ETF.
Well, I mean, it's at a minimum, it's at 820 inflow, right?
Yeah. Or just how all of the funds are looking for people to seed them, could just be Bitcoin spot selling, moving into these ETF products because they're searching for kind of more liquidity to seed the funds. Also, I think a big reason for the underperformance, obviously the flows are going to make a big impact over time, but just in the short term, everyone was just kind of trading and getting long up into the ETF, and then once that event has passed, it's anyone who was in a trade is probably going to start unwinding that because there's no kind of clear catalyst to hold to. It's much less clear cut of a trade. So
yeah, and I mean, if you have the GBTC thing, which might even be net mechanically, it's that's a good reason to sell if you're a trader in this instance anyways. So
I wonder how much, because I know there was the premium really compressed in I think it was over the summer. I don't remember, but I wonder if there's some element of optimization for long-term gains versus short-term and unwinding that position.
The discount
until then,
you mean came back,
right? Yeah, I haven't tracked when, just as proxy for when a lot of people kind of moved in and when volume really picked up.
Well, the ETF was first announced in June, if I recall correctly, and then the premium in August, and so the premium in June was 44%, and I think that's right around where the ETF was launched, and then it jumped quickly up to like
The court
No,
case, you mean?
you mean like when Grayscale won? Yeah.
yeah,
Yeah.
sorry, the discount was 44% in June, and then it jumped up to like 20% by the end of August. So I think that like a lot of people, as soon as that ETF was filed, were just kind of piling into that trade. It was also really bad on Ethy, but if you think about it, at a 44% discount, it's basically like 2x leverage Bitcoin with no liquidation. You're just paying like essentially a 5% like funding fee. It's like 2.5% of the NAV is the Grayscale fee. So that was a pretty attractive trade at the time.
I think it's interesting that like ETH discount is getting wider again.
I think it's around the sentiment of an ETF going through, where like initially everyone kind of assumed it was a shoe-in, and then you had big guy come out saying people on the inside were saying less likely, and then the kind of sentiment's been back and forth. I think it's probably just like the market pricing the probability.
Who said that? Someone on the inside said it was
Yes.
going to be, it was less likely.
AP, that Andrew account, tweeted like a
Okay.
source that he was referencing who had a seat at the table. I think it was described that way.
But
in the
BlackRock's like
conversations.
350 to 1, right? In terms of their ETF applications or something like that.
Yeah, it's more a matter of when, not if, I think. And I
Okay.
think it's basically the assumption was it was like a shoe in for 2024, and now people are saying maybe it'll take a little longer.
Is that it on ETFs? Is there more stuff to say? I don't know anything about
I
these
think
flows.
so. I know we're talking about kind of this, and then comparing it to what happened with the Coinbase top. I think it's a little bit different, right? In that I think the market was also a lot hotter then, and you also this is still a very long-term benefit, right? Part of the reason why stocks over time go up is because there's a constant bid via 401ks into these index funds, and so now you have a similar kind of dynamic with Bitcoin, definitely to a smaller degree at first, but there's certainly potential there, and I think that's why it's certainly like a short-term sell the news, where in hindsight it was just based on kind of how much people piled in, but I think it's not a one-off event, but has longer-term implications that are definitely bullish.
Yeah. I guess like on like why I was saying like it's just interesting. It's like Coinbase kind of marked the top in 2021, and then in 2022, like the Bitcoin futures launch was also near the top. It's just like a lot of these events that are just like clearly telegraphed, and like people, there's like a reflexivity to it where people are just like piling into the trade all up until the event, and then it's like there's almost like when it happens, obviously the Bitcoin spot ETF over time is going to attract a lot of flows, but like there's not enough people to like continue the momentum, and it's kind of like most of the people in the trade, there's only like one thing for them to do. It's probably like sell. So like yeah, and I think like Eric, the guy who covers the ETFs pretty closely, was just saying that yes, they'll have some like spot flows lined up in the beginning and like contacting like bigger Bitcoin holders to help see the ETFs, but like the real flows are going to take like the real organic flows that are like net new money are going to take time to come in as like people get as these like financial advisors or funds or whatever is get more comfortable with Bitcoin or which product to choose, and then kind of slowly come in over time as like
Yeah.
a bigger tailwind.
Yeah, like advisors weren't sitting there with like their finger on the button waiting to like ape the ETF for all their clients day one,
Yeah.
right? Like I was listening to Matt Hogan on a TradFi podcast. He was the Bitwise ETF, and he was just, it's like a long process. Like first the advisor might like buy a little for themselves, then like some clients might ask about it, right? And then maybe they'll start buying for clients and stuff like that. So but it's definitely, yeah, it's definitely not like a negative long-term thing.
I guess like moving to the ETH ETF, since we kind of saw the reaction of the Bitcoin one, and it seemed like a bit of a sell the news. Like I think we're down around like 16%, maybe 17% from that Thursday when it launched. Do we think that, because I think a lot of the prevailing narrative before the ETF was approved was like, okay, like ETH BTC is not performing very well, and then as soon as the Bitcoin ETF gets approved, like people are just going to start piling into ETH, like looking forward to the ETH ETF. But like given the reaction of Bitcoin after the ETF, do you think that like changes, like the market's like perception of ETH going into its ETF?
How specifically?
Like since Bitcoin was
Because the
seldom used,
ETF
like
was
do you think
yeah.
ETH gets
Well,
ETH
maybe it
gets
just
higher?
doesn't run up as hard as like BTC did, right?
I think once you have some kind of, I think there's just like no realistic timeline. This one was telegraphed both in terms of certainty and timeline, right? So it just
Mhm.
became a very no-brainer pile in, pile out scenario. Whereas at the moment, there is no kind of time element where you need to be acting quickly on the ETH side for the ETF specifically.
Well, I mean, ETH will be May or it won't be this year. So there still is like a time. Um, and so, yeah, I mean, it'd be nice, not nice, but like if all the ETFs pass, but there's no ETH conversion, it'd probably be more bullish because I think
Yeah.
ETH's got like what 8 billion, so it's not as big as GBTC was. GBTC was like 25, and now it's at 20 or so. But still, like that exact same playbook, if they keep the fee at 1.5%, is going to run back again with ETH, right? So, and that is a way that a lot of institutional investors, instead of buying like ETH spot to get exposure, they're probably just buying like ETH.
Mhm.
And so,
But also the dynamics on ETH were worse. Like the premium was way higher than GBTC, and the discount was was also way lower. So it might almost be like an exaggerated effect. Like if GBTC, let's say, unwinds like a third or something, like ETH might be even more, just because like those dynamics that cause people to get stuck in the trade were actually like more severe.
yeah, I remember when ETH launched and it was trading at like 11 to 12x the price of ETH.
Yeah.
It was so bad.
What's the Solana one trading at? Because I remember when Sol went on its
Oh yeah,
run,
it was a
it went on some
crazy.
silly like 800% premium.
That was on like negligible TVL, right?
Yeah, but it was still
It was trading at like over 100 when Sol was in like the 20s.
G
So
Sol.
yeah, but that's the ironic thing about like these ETFs and like having these products is that again, this whole GBTC unwind is just another thing that's happening because of like no ETF and just bad products getting forced onto the market.
Yeah, the G Sol is literally holdings per share is $30 worth of Sol, and the market price per share is $130 per
Yeah.
Sol.
Yeah.
It's trading like a 4x premium. That's insane. That honestly could have been an interesting trade. Like if you're a bullish Sol and like you just see how these things react when stuff rips, like just instead of buying the underlying Sol, just buying the G Sol for the premium.
What's the NAV on it?
Yeah, 21 million. It's not that much,
Yeah,
but
I mean, like,
Yeah, it doesn't matter. Yeah.
it's nothing.
it's still crazy, the premium though.
Someone who doesn't know better.
I think people aren't going to do those grayscale trades anymore. So I don't know if that premium is going to come down
They've
anytime
learned
soon.
their lesson.
Yeah, I don't think funds are looking to do that one again, run that back.
The other long-term bullish part about the ETF, other than the flows, is now it becomes just like more useful. Like I'm pretty sure you'll be able to margin it if it's like a liquid ETF versus before. I think there's like a lot of stuff you couldn't do with Grayscale since it was traded like GBTC since it was traded OTC. So that could like open up kind of like just making Bitcoin as a more attractive asset to hold, because before like you literally couldn't do anything with it, or like you went to those like lending desks that all got crunched in June of last year. So having it be marginable in like your brokerage account is actually, I think, a pretty big benefit.
Yeah, and I mean, they're going to get options in like April or something, I think. So
Yeah,
it'll also be the most
yeah.
liquid way to buy options over any like crypto native
Finally.
option exchange, right?
Yeah.
So, and like there's already someone already applied for like covered call ETF too, right?
Yeah, there's gonna be a bunch of products like that.
Yeah, we're gonna have 100 flavors of BTC ETFs before the ETH one comes, like 100 Bitcoin strategy ETFs, and because that's what
Let's get some
happens.
cheap calls. You just need a scenario where like Bitcoin's just going down or sideways, vol's compressed a lot. These ETFs are just selling calls.
Well, yeah. Do you think that this is actually like it's a good point? Like with options coming live, like do you think where like institutions can trade volatility in size? Like, do you think this actually changes like the vol regime for Bitcoin moving forward?
For sure.
Yeah, it's
If those things pile
probably
in NAV, yeah, I think it compresses.
yeah,
vol
it's
for
probably
sure.
all dampening over time. But like there's some interesting dynamics. Like in 2018, when Bitcoin was at like 3,000 and like all these miners were going bust, like on Deribit, like all these Bitcoin miners are just like selling calls to like stay afloat at like 5,000, 6,000 type thing when Bitcoin was at 3,000, and they were making calls like so insanely cheap because they're just like trying to harvest extra yield. And then Bitcoin rocketed from like 3,000 to 14,000 in like, 4 or 5 months. So there's like some interesting dynamics that since this asset can move so quickly, that you could probably get some scenarios where like some more interesting
Yeah.
scenarios like that.
I do think that like the whole institutionalization of this asset class is something we're not like totally um like Larry Fink went on CNBC and said that crypto solves money laundering, right? And because he's highlighting, how it's like all publicly traceable and all this stuff, but at the same time, um, this makes like the privacy fight and moving away from purely public, kind of like dystopian type blockchains. It makes it harder to fight this because now the institutions with big money are like pushing this fully public, fully transparent, fully open narrative, right? So it's like good and bad. It's good because you have someone like Larry Fink saying the exact opposite of the Elizabeth Warren type rhetoric that a lot of people hear and think, the money laundering and, terrorist groups, all this stuff. But I think it will make the privacy side like a bit more challenging.
I think a meaningful amount of privacy was probably a pipe dream.
Yeah, but you still need you can't have businesses on chain without privacy. Like it
No,
doesn't.
I mean, like you can have some elements, but it's still like controlled privacy, right? For a business to some extent. I mean, like, to the extent that
Yeah, like
kind of
regulators
the
will
hardcore people
always.
want,
If a
right?
regulator ever wants to see like a business's, well, like obviously they have to show all that.
hmm
So I mean, privacy pools are an interesting concept that, in theory, like they should work, but like the problem is there's never been any guidance on like what is acceptable for
Yeah.
privacy and what's not.
If you see a bit of a red wave in the US, I think there's a better chance of it happening, right? They're anti-CBDC, which is good for privacy, and so a lot of that stuff, I think we'll see the extent to how far the privacy component can go. But yeah, I don't know if it's going to go that far.
So bullish BTC, bullish ETH, bullish ETH BTC. What are you guys thinking?
I'm like pretty indifferent on ETH BTC. And to be honest, it's like a ratio that I don't really care about too much. I feel like it's over analyzed. I feel like it's just gonna oscillate like between
It's good
like
for trading.
yeah,
Yeah.
yeah. I don't think ETH will flip BTC, okay? So it's like there's a limit to like what I think the ratio will go. So I don't really like think about it too much.
Yeah, it's funny to see the opinion on ETH flipping BTC kind of go back and forth. There were periods where it was a shoe in, then now it's less of a thing.
Yeah,
What about
follows
Solana flipping
price
BTC,
very
Ceteris?
closely.
Solana will never flip BTC.
Yeah, I think
Yeah.
sorry if you want to go.
No, go ahead.
Yeah, I think like Q1 I'm still a little bit like cautious, just because of some macro stuff. I don't know if we want to get into that. But yeah, I'd say I'm still kind of cautious in Q1. ETH BTC I don't have a strong take on. I do think Sol will probably outperform, so it'd be really nice to maybe I want to buy Sol if it comes down to like 60 or 70. I think it's at like 85 right now. That would be nice to get in. But other than that, yeah, I'm kind of cautious in Q1 for sure.
You want to go into the macro stuff or like how? Yeah.
Yeah,
What do
like
you
we
guys
can
think?
go into it a little bit, but there's probably better people to listen to this on. But basically, like the one event that's actually like coming up soon that could be interesting to look into. So they just stopped the BTFP, which was that like emergency facility that was announced after SVB went under to kind of help the banks. So that is expiring, I think, on March 11th. They're not making any new loans. That's not going to put some more pressure on the banking system. That came out last night. And then there's the US is going to choose like how they're going to finance themselves for the next quarter coming up, I think on January 30th. in November 1st, which is when like everything started ripping, like the stock market, Bitcoin, like tech stocks, bonds, was largely caused because like Yellen shifted the US's debt issuance like to the short end of the curve, which was, helpful for liquidity. So there's like a new decision on that coming up on January 30th. So if she like shifts issuance back out to like the longer end of the curve, it could make, longer term yields rise, which, more pressure on banks could go into, some pressure in Q1. And I think people are thinking that that's a possibility because you kind of create, some disruption in Q1 where maybe the Fed stops QT or gives them cover to like kind of cut rates. And then Yellen can kind of like build up a bit more of a piggy bank going into the election and then just kind of like rip everything into the election to try and help the Democrats out. So there's like better people to listen to on, but just some like high level points if you're interested. You
Were
can
they
go look
still
into
giving
that.
out a ton of new loans under that program?
I think they're gonna stop giving loans on March 11th.
Yeah, but like, have they even been giving out a ton still?
Yeah, there's still been some pretty significant growth, I think, in the past like few months. Because all the banks in the US are like backwards in terms of their like they made all these loans, these long-term loans when like rates were near zero. And then like short-term rates come up. And it's like, why would I hold my money in a checking account that's earning like 10 bips versus going and buying a T-bill that earns 5%? So like you have like, depositors wanting to leave and they can't really make money off of the spread because everything's inverse of what it was, a few years ago when they like made out this whole loan book.
Anyone want to comment on that, or we go back to crypto? Maybe touch on the Jupiter launch. Yeah, Ceteris, maybe you can take it.
Well, I mean, I know Duncan kind of talked about this on the last episode of, anytime you get one of these new token launches in the ecosystem, you're kind of just increasing the paper wealth by creating this new token. But you're not necessarily like increasing the actual amount of capital in the ecosystem. So I think, it'll be pretty important. Like this Jupiter one is definitely the most hyped airdrop as far back as I can remember. There's also like a lot of funds have like even still a lot of funds have like zero SOL exposure, I think. And so you got to think about like I think Jupiter is going to have like 20% of their supply day one with 10% of the airdrop. And so like what does it do? Obviously the meme coins have run like a ton. So like what does this launch do to the meme coins? What does it do to like SOL? I think it'll be kind of interesting to like watch how this plays out because right now with Solana, it's basically their SOL. There's Jito, which is like the beta thing people are trading, and then there's just a ton of meme coins, right? I also think Jupiter is. I've been reading the last couple of days. They're going to try and do like, if you hold Jupe and you're in the DAO, all these launchpad things they're doing, like you get allocations and everything. So there's not going to be any like revenue for this token for at least 2 years, is what they've said. But I think they're going to try and like gamify it somewhat. So
it kind of boils down to the flow stuff, right? If you have, I assume Jupe is probably more palatable for quote unquote institutional investor side. So if they come in at that value, basically passing liquidity on to the meme coin guys that are getting airdrops, which are then going to pump it back into meme coins. And so, like whereas like I don't think the appetite is there to that extent for those guys to be buying meme coins, those guys being the institutions. And so if you have that flow committed, it can definitely be bullish. And I think, part of the reason why the meme coins are pumping so much is because like there aren't a lot of other tokens. Same reason like Jito's been doing well, and when you kind of price it on a like Jito market cap to SOL market cap is much higher than kind of Lido market cap to ETH market cap, and I think part of that is just because there's not too many other alts for people to pile into in that ecosystem, which is also like the reason why meme coins definitely do well along with like the fees and the UX. But
it'll be interesting if like like Coinbase and Binance And yeah, I say it like that. Have the liquidity on, have like the listings on like day one, because that's
Yeah,
kind of like the main way how you actually get net new liquidity.
I definitely think that that would be really helpful. Like if they have the listings, then there's a scenario where people are sending like their jupe to Binance and then selling to people on Binance, which like injects kind of like new cash into the Solana ecosystem. But if you just look at Sol like outside of the L1s, I think it has like $2 billion worth of stables on it. Jupiter is trading at 50 cents on Avia, which isn't a super liquid market, but like it was trading at 70 cents when it first came out. Like people are really anchoring to that price. 70 cents would be a $7 billion FTV. Like 50 cents is a $5 billion FTV.
What kind of volume is it doing right now? Is
Like,
this
it's a
actually any
ridiculous
form of signal?
volume.
Oh, okay.
Yeah, it's like I think it's number 2. I think it's been number 2 a lot of days. I think it's done more than Uniswap some days too.
Well, not Jupiter,
Yeah.
sorry. No, more so the derivative that's trading Jupiter price. Like, is this price
I think
actually
it's like
signal?
6 figures of volume a day.
Okay,
Yeah.
so that means absolutely nothing.
I know, but no, it does because people are anchoring their perception to it. Like
We'll
it's
see.
very well. I think that obviously it's gonna bring up like if it's trading at $1 on the pre-market, that's going to, even if that's a ridiculous valuation, it like anchors people's price like much higher. Like if it launched,
I'm not
which
doubting that for sure. I just think it's basically like the difference is the degree to which people anchor it versus.
Yeah. I think on those markets, Jito was trading, I think it started trading at like 20 cents or something. And then it
I
went
think
to
those
like,
markets will end up being like just like marketing spend for projects.
yeah,
Like
because then it went to,
you
because
can
Jito was
just
trading at like 20 cents, then it went to like $1. And a lot of people were like, okay, this is an illiquid market, $1, that's so high.
and then it
And then
launched
the
it
first day
too.
it went to like 450 or something when real money came in, right? So yeah, I think those pre-markets are kind of cool. They're doing this for a lot of these. They also have one like for Dimension and stuff, right? But yeah, the volume is just so low, it's hard to take too much besides just like the mental price anchoring type thing.
Yeah, no, I definitely agree that there's an element of that.
Yeah.
It's just kind of there's with each launch, I think it's less likely for it to drive to an outsized val unless like there's more money coming in than
Unless like
yeah.
maybe those markets become more liquid over time. But like at 50 cents, just for kind of like the sake of talking it through, it's $5 billion FDV gonna launch with like $1 billion worth of circulating supply, which if people are like selling that, that's a lot of stable flows that are required on the margin to support that valuation. I feel like it probably just like kind of sucks some air out of the Solana ecosystem. If it launches lower, then it's less relevant, or if it launches in parity with like an L1. But I think a lot of people are looking at it and be like, okay, Jupiter is launching at 5 billion. Like this is gonna reprice every single DEX on Solana, like every single coin on Solana, because like this is such a big val. But I think in reality, if the market conditions are kind of as they are now, where it's kind of like chop or down, probably going to be like net a liquidity suck. Like even if
Yeah, I
you
mean,
look at
yeah,
like Solana's like 40 billion to Jupiter at 5 billion versus like Uniswap, I don't know, maybe it's like
it's
5
5
to 10,
billion,
yeah, 5 billion versus
it's
ETH at
nearly
like
6, yeah.
but
yeah.
it's 4 billion market cap, right? So you do have a lot more of it's a lot harder to support that and move
Mhm.
that price.
Yeah, no, for sure. Anyway, it'll be interesting to see what happens. I'm leaning that it'll probably be bearish, the eco plays. And also, like we saw with Arbitrum, like I think like Jan and I like going into the Arbitrum launch, we're like excited for like this GMX bid to come because they're like, oh my god, like there's gonna be like $1 billion of new money in the ecosystem. But really, what ended up happening was like GMX like sold off 20% as soon as Arbitrum launched because people were selling GMX to buy Arb, which was like kind of just demonstrated that it was just money within Arbitrum flowing around in a circle rather than like this new wealth coming in. Obviously, like Ceteris was saying, if it gets launched on an L1 and then you have like new money outside of the eco coming in, buying it from, Solana ecosystem people, and then they re-inject that in, it could be good. But given there's only $2 billion worth of $2 billion worth of stablecoins on Solana, I think it could be more of a drain than
You probably
what
need
people want.
like like what 250 of like new capital come in just to keep everything flat. If Jupiter launches at like 5 bill fully diluted, because circulating would be like one something, and then you have like the multiplier, right? To keep like paper wealth flat, not like
Yeah.
so. Let's
Probably.
say decent amount of capital, but I mean, it's possible.
Yeah, that really boils down to, and I'm assuming they will get it like the centralized listing. Like it's very easy to get that much liquidity on across a couple of sexes.
Has there been any good research on like that multiplier effect of like new money into ecosystems, like how much that affects, alt prices or kind of paper prices?
They've tried to do it on Bitcoin way back when.
Yeah.
Money into Bitcoin and what the impact is on market cap. I forget, like it's really hard to do, but I forget what it was. There's like there's a big range on it where to the point where it was hard to really get too much signal from it.
I think there's like even more in-depth studies just done on stuff like SPY, because it still has similar dynamic. Those would probably be like the most accurate, but that's like the most liquid product in the world.
Yeah, I'd be interested just to understand like ballpark how much. And I also think it depends on the market condition, right? Because it's all about like marginal buyers and sellers. If like the market's ripping, there's like very few marginal sellers, then like you kind of get a reflexive dynamic of like just even like more money coming in makes a bigger impact than it would if there's more sellers. So it probably depends on like the regime of market you're in as well. But it would be interesting to kind of have a ballpark figure on that.
Yeah. I mean,
Yeah,
with like an
well,
AMM,
sorry.
you can actually do the exact math, right? And so then it just depends like how concentrated or not
Yeah,
you're like
but like
making.
the second that's only in a vacuum, but
Yeah,
without
yeah,
like
just in the vacuum.
yeah. But what was sell price when Gito launched, just in terms of
I think it was in
thinking
the
about the market
60s.
situations?
I think it was moving from 60, like it was during the move from like 60 to 120, like during that.
Yeah, but it was like I'm pretty sure it was like 60 or 70. It wasn't
Yeah, I think the probably the trend is more important than the price in that scenario.
Yeah,
We're
it
talking
was
about
like during
marginal
that
buyers
like
and
next
sellers.
massive leg up, which I feel like is what let Gito get. Like when I was looking at Gito at like 4.5, but what's it trading at now?
under 2.
Yeah, like when I was looking at it at 4.5, I was like, oh my god, like 4.5 billion FPV is pretty heavy. It's like 10% of Sol's market cap. It was like, yeah, this is gonna come down, but yeah, I think a lot of it is to do with the trend, John, as well. Like if Solana started going on another run and then Jupiter even launched at like 50 cents or higher, I think it would be completely different. Because that's just like the mindset of like, okay, people get an airdrop, it's like more paper wealth. It's like, okay, I'm just richer, like I'm buying more, opposed to when things are going down, they get an airdrop, they like sell. Like
There's a lot of airdrops coming these days. So
it's
Yeah,
free
when I talk
money.
about points, there's a lot of people going losing their minds on Twitter about points. I don't really
Yeah, I feel like
get the big deal.
the
Maybe someone
hate doesn't make
can
any
explain.
sense.
saw a good tweet today. It was just points or L2s for tokens. It's like pretty
I don't
much
get
what
it.
it is. It's just, what do you mean you don't get it? Points are like a token L2.
Ish.
I still don't get it.
They're
Yeah.
basically okay. It's a more scalable way to give people incentives because you just keep it on like a centralized server
Yeah.
before actually putting it on chain.
Okay,
That's fair.
yeah.
Yeah, I mean, I think
That's
like
literally how I see it.
if you're anti points, you're anti tokens. Basically, it's the same. Like it's just a more accurate and calculated way to distribute tokens. I think particularly what's good is with tokens you have a kind of a consistent drip, and so you have there's the idea of as you get them you want to sell them, and so I think at that you potentially like take away the effectiveness of the token because it dampens the price because there's going to be this kind of consistent drip, and you often can't be as accurate. Whereas with tokens, I mean with points, you usually do them in waves, right? So you have like tokens, first wave happens, token gets priced, now you're doing wave of second points, but there's not necessarily new issuance coming out for a while, and so the points are used as a carrot to incentivize behavior, but their value is one, it's somewhat real because you have a liquid proxy for what you might get, and the price holds up pretty well because you're not having this kind of constant drip of tokens. So I think it's like better for price, and I think you can be much more kind of calculated and effective with your like behavior incentivization.
Yeah, it's probably better for protocols because I think like one of the biggest reason, like just the transparency aspect of it is huge to incentivize behavior versus with airdrops. Like I feel like a reason airdrops like farming is still can be still so profitable is because like people really don't give anything weight until like they hear it's coming, and then it just gets like kind of and like even then you don't know what the criteria is, so it's like the points is very clear. It's like, okay, like you are earning progress towards an airdrop, which probably incentivize more users to and capital to come on and use your platform versus people doing like all this work and not knowing what the criteria is to like, you know, potentially farm the airdrop. So I think airdrop farming as like points becomes bigger, it's going to become like less lucrative just because there's going to be more eyes on the airdrop, and then the protocol can also incentivize like very specific behavior. But yeah, it's like nothing crazy.
Yeah,
It's
it's
just
nothing.
an
It's not like
accounting mechanism for the airdrop.
it's not dangerous or anything. I agree that getting rid of the drip is probably a net benefit to protocols. So yeah,
And you
I
can
don't think
like
it's
delay points. Like drip is very permanent, and there's so much sentiment around it anytime you change it. Whereas points, you know, if you, especially if you do it in stages, you can delay these further stages out, and you have a lot more flexibility. Whereas, you know, with the token stuff, it's once it's out, it's really hard to adjust without some level of like unreasonable backlash.
Agreed. Well, we've been gone for a while. Do you guys want to talk about individual tokens? Have a bit of a shitcoin corner, or what do you think? Give people some alpha in these dark times. Well, no, we called the
They
top
never
last
told me.
time.
I don't know, one thing it's not like token related, but just a trend recently is like both Lira and Avo, or these like options, perps, L2s, both switched their DA from Ethereum to Celestia over the past week. So I think this is like there's something pretty important to keep tracking, to see like how many protocols start to do this thing where they stop like paying Ethereum and go pay like a 20th or less of, you know, just by
Unwinding
using
of the ETH
Celestia.
alignment.
Yeah, I mean it's like this whole thing where you got the bridge and then you just post DA somewhere else. And
Yeah.
Does that make Celestia's $15 billion valuation make sense now, Ceteris?
no, but I think yeah, I don't know.
I think the DA being a commodity thing is pretty mid though, honestly, because
I
it's the if you believe in the roll up centric world, DA is the only like it's the only thing that rollups really like all have to use, right? Like you don't need a settlement layer, and settlement's not really like real anyway. You just need DA, and there are like network effects to
yeah,
DA
yeah.
and data availability sampling and stuff, right? And there's brand effects. Like it's also nowadays announcing that you're using Celestia for DA is like a branding opportunity, right? You like, announce it on Twitter and people get excited. I don't know. I think it's yeah.
Basically
I mean,
you have to
I'm not defending. Yeah, go ahead.
no, it's like you need to believe that the benefits you get from like data availability sampling and like the bridging outweighs the cost reduction that you could maybe get somewhere else. But I mean, Celestia is gonna like every time Celestia kind of like hits its capacity, it's going to increase full node and like validator requirements, right? Um, and so yeah, I don't know. Right now, there's only Celestia DA, right? Like Eigen the DA isn't live yet, and there's a bunch more coming too. So it really depends. They're all going to be like super cheap for a while because they're way oversupplied. But nobody, unless you're using ETH1, like nobody should be paying high fees for like anything now moving forward because there are just so many DA layers out there. Obviously, like there's going to be some of these Ethereum rollups that just stay on Ethereum and like 4844 will help a bit, but
Yeah. What broader question? When do you think like fundamentals will like how many years from now will like fundamentals start to like matter more? There's still like even when you say this, it's real. It's like, oh, like we're gonna launch with Tia. It's like because Tia's price is ripping, like you know that's like good PR, and like maybe our price will go up. Like so much of the market is still almost completely dominated by narratives. I just like wonder how, like, when does that start to shift to like slightly more fundamental base? Because it's honestly like crazy how
Yeah, I
much
think
is
it's
narrative
you see, you have
dominated.
like two things. One is like generally in bear markets it matters more, and then in
Yeah.
bulls it's narrative. So I think you have that element that it causes it to kind of oscillate, but I think it'll gradually matter more when um, it's not like this TAM you're building for, but some of it's already here. And
Yeah,
So
I
it's like
mean,
once there's more users, then fundamentals will matter more.
yeah, like think about it this way, okay? Let's say in 2-3 years, Celestia has like 100 rollups, and I mean, I don't really agree with this thesis of like millions of rollups, but let's
You
say,
can have way more than 100 in 2-3 years, but
okay,
yeah.
but let's say there's like more than 100, okay, a lot of users, and annualized, it's doing like 5-10 mil of fee revenue, and that's it, right?
In 3 years from now,
like,
the thing that's
like
trading at $15 billion
that's when
revenue.
people are going to start to be like, okay, this thing has a lot of users, it's very saturated, and this is the kind of revenue, right? So I think what recently is explaining a lot of this is, first of all, modular money meme is like a good meme. People like people like getting all these airdrops, and there's also, just because Celestia is only focused on DA right now, I don't really personally believe that that's what it'll be like forever. I do think that they will launch some like Celestia aligned, I guess you want to call, like roll up that uses TIA for everything.
They kind of have
And
that. But yeah, it was
I
Aspria,
think there's
right?
also part of it's also like it is antithetical to my bags, but I think it's a different world pre and post VC unlocks for some of this stuff too.
Oh, 100%.
Yeah.
Like there's gonna have to be air that comes out of like, I think the big ones are like Arbitrum, Optimism, Celestia are like the 3 biggest ones with just like, 10 billion plus in like unlocks to come, which is like a lot of money that's gonna need to come in to support the valuations if they're gonna continue to do well or even go up or continue to go up.
So Jan's saying the quiet part out loud. Luckily, no one watches this yet.
Exactly.
Jeez.
Well, literally, just like if you go to CoinGecko and then sort in the top 100 by like largest FDV, and then just like look at some of these projects, like they're circulating versus FDV, it's insane. Arbitrum's 2 billion, FDV is 17 billion, TIA is 2.5 billion, FDV is 15 billion. Like Optimism's 2.5 billion, FDV is 12 billion.
Yeah, distribution of like the top 150 where you can have a market cap number, but mostly just as a percentage of circulating supply versus FDV is I think going to be pretty telling.
Yeah.
Yeah, but the FTVs are also very different. Like some of
For
these
sure.
FTVs matter way more than others. That's like
Yeah,
some
you
of them
need
it's
to
all in the
do.
treasury. Some are super heavy. So some of them it's like everything is investors, right? They did like a bunch of rounds like really early. Others it's like there's a bunch of it sitting in the treasury and it's like a totally different thing. I think it's hard to.
There's a lot of
Yeah.
nuance to FTV, and you kind of need to make like an NPV of FTV, and they all have different like unlock schedules. To your point, sometimes like 50% is this community treasury thing, right? And
Yeah.
that is like the majority of that will probably sit there forever. Okay, like the Solana, I know the Solana Foundation has a massive treasury, and mostly what they're doing is just delegating it to validators. And there's going to come a point when like they just have this massive treasure. It's like, do we do anything with it? Like, do we burn it? I don't think they would ever do that. But there's a lot of projects that kind of have this sort of thing. I remember when like Mango Markets did their IDO a few years ago, and they sold 5% of supply, and then Team had 5%, and then they just had 90% of it was just unissued tokens that would be like owned by the DAO. And so they had this massive FTV, but those tokens never got like used for anything. Because like the DAO would never just choose to like dilute themselves and issue a ton of tokens, right? And they even burned half of them at one point and nothing changed. Like the price didn't change at all when they burned like on paper like $1 billion or something, right? So
Yeah, there's definitely levels. Like the treasury is just basically there if you need it. Because like with stocks and stuff, like you can issue new shares, but like once you have if it's hard coded and you can't have more tokens, then you kind of just like cut off your arm if there is like a opportunity that needed a large treasure in the future. But the market perception of it right now is just, people look at that and they kind of get scared. It just requires like a higher level of like diligence to get comfortable with like a massive FDV. And obviously, like they were saying, like, from project to project, it's a very different split. So you need to go into it more.
Yeah. There's probably some kind of metric you could use, just like, how much sitting in treasury, and then like some kind of cost basis basically of the rest of it, like how many rounds you did, or what, like how much everyone's up would be super useful to do. And like a lot of this stuff's public. So
unrealized gains, basically.
yeah,
Yeah.
because some of them actually fundraise pretty well. Like they timed it in the bull. Others have been going for way longer and have like way higher like unrealized gains. But like let's do a shitcoin corner, because I'm also going on the banter thing, and I need some shitcoins to to talk about. So let's do a shitcoin corner. Who wants to start?
Meme coin that's just good for the next year is Trump. It's just a good way to play Trump beta. They got a good launch. He seems like a pretty good shoe-in at this point. Obviously, a lot can change, but
it's a shoe-in. You say not financial advice, but this one is a shoe-in.
Yeah,
no,
I mean,
he's for Trump.
Well, it's a couple things. It's a combination, right? So like he's most likely going to be the Republican candidate, and then somehow Biden wins, but like that just means you don't know that part for a while, right? So I think you're going to get a lot of just bullish momentum on him for the coming months as he kind of goes to the Republican primary, and it just makes sense for there to be a meme coin here, and like this is the one that's in the lead. They had a good, like the founders run this massive podcast. They have a bunch of followers. They airdropped him what's now worth like 7 figures worth of this token, so that you can absolutely see a world where if this is pumping, there's a chance he randomly mentions it or dump on us. Yeah, bullish selling. No, but they bought a bunch of his NFTs, and then like they're doing like,
dump on the whole community.
There's like a 1%. What do you call it?
Yeah,
there's a
I actually
1%.
think Trump is a higher. I think it's a higher likelihood.
They donate a portion to veterans and then a portion to like child trafficking prevention, and they've already donated a meaningful amount there. It's pretty good narrative. But yeah, there's always a chance that Trump's. And then you have like the 47 memes that I'm sure will be anchors for price in the future, or not anchors, but magnets.
Magnets.
One of
Anyway,
my long-time holdings is doing
go on.
well. Sin is doing well. Is doing decently well from the bottom, not like overall. But they just launched this new RFQ bridging. It's kind of cool to use. It's like basically like instant bridging between chains for like less than $10,000, and they're gonna expand that later. But it's honestly a pretty good UX going from chain to chain.
Yeah, everybody. That's like how all bridging is going now.
Yeah, that's
Across has moved to that model. D-Bridge has moved to that model. It's like this intent-based kind of thing, and then you're not having like money locked in bridges. You're just dealing with native assets. This is something we actually wrote about in the M4 Year-Ahead report. So go ahead and check that out.
But they didn't mention Synapse because
we did not.
Doesn't like me. Another interesting one to look into on Solana's Lifinity. That I bought some of that. It's an interesting DEX. Like others can probably talk about it more, but basically they're just like an Oracle DEX on Solana that concentrates like their liquidity, which is all like protocol owned, around like the Oracle pricing. And most of their pools have been profitable in terms of like their market making profits, and then also just their general fees. So I think they do like between 10 to 15% of like all of Solana DEX volume, and they're just kind of like optimizing for kind of the most revenue. It's an interesting play. It's like pretty unknown, but it's something cool to check out.
Yeah. I mean, so yeah, disclosure, I do own Lifinity.
Yeah, I own Lifinity as well.
I've like been following this project for a long time, like 2 years now, maybe.
I believe Yano is Trump too, just to disclose this for him.
Yeah, I think the thing with Liquidity, so they're very good on like capital efficiency because they have this oracle that like they use the Pith oracle, right? Updates prices in real time. And then they also kind of employ these market making type strategies where they try and actually trade momentum. But they are kind of just like fundamentally like capped at some point, right? Because an oracle based model like this, you always have to wait for centralized exchange liquidity to start like market making for it because you need the oracle, right? And you need like so it'll never be the place of price discovery.
But it could be like more dominant than it is right now, I think, because basically like Solana trading, 90% of that probably happens on central exchanges. So like they could grow to like a even bigger part of the Sol DEX.
Yeah,
market.
I mean,
It's
what
just,
is
like new tokens?
What's it
and
trading
stuff.
at? What's the fully diluted?
So 55% of the tokens are in the treasury, I believe. But it's trading at like
it's like a
200
hard token to
million.
like understand. It's like pretty illiquid.
trading at
There's
what?
like all these different curve locking type things.
All
Yeah,
right.
they have like the lock and stuff. But I can send you something afterwards on it.
What's it trading at?
Well, yeah, so the FDV with like 60% treasury, I think is 250 million.
Okay.
But then like there's a lot of nuance in like the circulating because a bunch of it's locked up.
Yeah, I think like I mean, like they had this bonk pool that they started. Bonk sold at like 20K liquidity, and they started at like the bottom of bonk. And that pool that was market making, bonk sold actually outperformed like the straight price increase of bonk, which is pretty insane
What?
when you think about that.
How is
Yeah,
that
That's
possible?
nuts.
Yeah. yeah.
What kind of pool? What's the pool design?
It uses
It's
It's
an
the
Oracle.
Oracle one. It's
and they do
like what
like
Dodo. Isn't this what Dodo tried to do like back in the day? But it's just like
Yeah, but this
works
is
on
on
Solana because it's
Sol.
faster.
Yeah.
Or yeah.
yeah, this model only
But
works
still,
with
how
like the
the
push
hell?
oracle. Yeah, I know the bonk pool was crazy. Like it was actually insane that they
Like the only way
I
outperformed.
you
mean, the
expect it
thing
to
is,
like
it turns over
outperform
a
is if it
lot.
does this for a while, but like bonk just went up.
Well, because they also do like
No, but it turns over a lot though. Like I remember there's some of the pools on Liquidity they're turning over like 20 times. Like
Yeah.
they kind
No,
of
the
thing.
turnover
So
is
the fees
insane.
probably were pretty ridiculous.
it was
I
the
guess,
fees,
but
and then
yeah,
so
pretty
they're like
impressive.
they're very transparent. They like break down and give you like what's fees, what's market making profit, right? And like market making profit is kind of how they do like trend following and stuff and momentum trading. And so I think they had a lot of, and like market making profit stays in the pools, whereas the fees get like distributed.
Yeah. So the Bonk USDC pool has $72,000 worth of liquidity in it. And in the past 24 hours, it's done 1.3 million in volume.
And they also have like, they'll make multiple pools, right? Like, so they'll have Sol USDC, which has like 300K liquidity and does a lot of volume. And then they'll have one with like a mil liquidity, which actually does a lot less volume, but it's just able to handle like bigger trades, right?
Yeah.
But yeah, like there's been a couple, I mean, it's Oracle model. So there's been like a couple like Oracle issues and where they like mispriced assets and stuff. So there's definitely, yeah, there's kind of like two ways to do this like MEV to have like an AMM not get just like ARB to death. And we've talked about this before, right? You either have an Oracle type model like this, or you have some sort of like top of block auction that, you know, you see in Cosmos and like some other protocols are trying to work on Ethereum and stuff.
Aori, right?
No, like more like Sorella,
That's it,
where you
Sorella.
have, just like if you want to interact with a contract, which is like the pools, you need to have this auction at the start. Very similar to like what Skip does with their protocol builder.
All right. I think with that we'll call it. Cheers, guys. This was a good one. Yeah, great episode. Enjoyed it. See you again in 2 weeks.
All right. Yeah.
See ya.